Hello, welcome to European Open Briefing for Friday, January the 25th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So the week is on track on ending on a positive note. Equities got a boost overnight from a rally in US tech stocks. The Dow Jones, though, did close low. We do still have a lot of uncertainty hanging over the markets, mainly the trade tensions, Brexit, Chinese growth slowdown, and of course the US government shutdown as well. The dollar index is slightly lower this morning. Dollar yen, though, is somewhat stronger. The euro and the pound moving upwards, though the euro did come under heavy pressure yesterday after the ECB's meeting when Draghi was more downbeat on the Eurozone growth outlook. Sterling, on the other hand, continues to surge on hopes that either there will be approval of the Brexit deal or Parliament will block any no-deal attempt. Having a look at the risk-sensitive currencies, the Aussie and the Kiwi moving slightly higher. The Aussie recovering above the 0.71 handle. The loonie getting a helping hand from higher oil prices. We did see a jump in crude oil prices yesterday after the US threatened fresh sanctions on Venezuelan oil exports. So let's take a closer look now at the European currencies first. We can see the euro yesterday falling to as low as 1.1286. So that's a 6-week low. So Mario Draghi was more downbeat about the growth outlook, stressing the downside risk to the economy, and this has raised the prospect that we won't see any rate hikes by the ECB in 2019. In contrast, the pound rallied on reports that the small Northern Irish party, the DUP, could in fact support Theresa May's Plan B at next week's planned vote if there is a time limit to the Irish backstop. So that divergence sent euro pound to a 20-month low 0.8615, while sterling jumped to a 2.5 months high of 1.3139 earlier today. But investors could be getting ahead of themselves. It's still highly uncertain if May is going to be able to get the EU to agree to a time limit to the backstop. Ireland is strongly opposed to this. So if such a concession doesn't come, there's still a strong chance that MPs will vote down Theresa May's Plan B. And if there is no amendment to the bill to block a no-deal scenario, we could see sterling reversing sharply lower. Let's now move to the dollar yen. We can see it's been trading sideways for the past few days, but next week we could see dollar yen breaking out of its recent range. We've got the FOMC meeting on Wednesday. US-China talks will continue to the next round on January 31st, and of course we'd have the NFP report next Friday. We did see some mixed remarks from US Commerce Secretary Wilbur Ross on the progress of the US-China trade talks. He said that the two sides are miles and miles from getting a resolution, although he did later add that there's a fair chance that there will be a deal. And a quick word about the US government shutdown. Senate vote yesterday. The Senate didn't pass the bill, attempt to end the government shutdown, but talks are continuing, and the longer it goes on, the more likely it's going to drag on US GDP growth. So that's another thing, negative factor, potentially adding to the several number of uncertainties investors are currently facing at the moment. And we did also see the US threatening to impose new sanctions on Venezuelan oil exports. So that sent crude oil prices jumping higher, and that did help the loonie move away from yesterday's 2.5-week low, although the gains in oil prices were capped from a large jump in US crude stocks. So that's it from me. Thank you very much for watching, and have a great day.